Good morning, everyone. This is Anne Marie. Today is Monday, October the 7th, and this is a SPY report. We have got a gigantic gap down this morning. Couple of reasons, probably. As I look through it, I look through the news, there's all kinds of things. They can say U.S. debt worries, they can say general unrest, they can say technical, whatever it is. We are gapping down quite a bit pre-market. Now notice how important it was to hold this level. Chances are, as you may remember, last week I drew a line that measured the distance between the 50 and the 200, and I have taken a Fibonacci retracement inside of there. Now, if this fails, the minimum retrace inside of this space is 38.2, but it is extremely likely that we get to a 50% retracement. The 61.8 retracement comes very near this relative support, so I'm not willing to say at this juncture that moving through 50% will allow us to get down into this region right here, but it does seem to make it quite a bit more of a reality, and that really shifts everything around, because all of a sudden what we've done is take this wave and completely set up to retrace it. Okay, now, if indeed, let's, hang on. Probably don't have this, but let's see. Yeah, that's almost on 27.2, so it's a little strong. That's the 1618 for the retracement. Often we do see that. We see a move that puts us, if we lose the 127.2, it takes us right back into 61.8. And now that is losing that particular level right now. Pre-market, it's going to be pretty messy today. All right, so what are we suspecting? Partial gap fill. We have a lot of U and V-shaped formations in the market. This is not going to be any different on the day, so watch for the partial gap fill on the open. In SPY, we can see we had all these really pretty formations, everything popping to the upside, looking like we're holding it. And what do? Gap straight down. Last night I tweeted, the charts look like mud. I am not kidding you. They are absolutely atrocious. You cannot trade trend and expect that you are going to make money in this market. You've got to adapt what it is that you're doing. That's going to be trading level to level. That's going to be trading very tightly. It's going to be leaving yourself just minimally exposed to any kind of gigantic momentum swings, and you just got to be very patient and wait to get out of this particular noise. This is the beginning of earnings week. If we've got poor earnings, then we're going to have trouble. Else we might be in good shape for really bouncing back up and out, taking care of this noise. But right here we have a high, a lower high, a lower high, a lower high, a lower high, a series of lower lows in this short order. And now we are going to be gapping down more than likely into this. Let's see where that is printing right now. If you would give me 2 seconds, I'm going to just pop that up, have a look at where this is printing. 167.41. That is right here, right around this noise, right here at this pivot point. We have been talking about this pivot very, very much. And so, that's what we're going to be looking for. We are looking for the bounce up back into the congestion, and that would be a partial gap fill, and then we'll see what happens, right? This SPY chart shows a lot more downtrend than the IWM or the Qs. The Qs this morning are down 64 cents or so from the close. So it's about 78.80-ish that it's sitting at right now. So that puts us right about here. Again, we'll be looking for the bounce, the partial gap fill into these moving averages, and then we'll have to see what goes on. Folks, if you don't have to trade, don't. It's the one thing that really, well, not it's the one thing. There are a lot of things that separate good professional traders and good traders from people just playing around in the market, and that is sometimes you do not need to trade. Sometimes there is no edge for you. Sometimes there are no overt areas for you to capitalize upon. So why in the world put yourself out for that? All right, and this is one of those days. Please go to the blog for the specific levels. They are tight. Down gaps exist right now, so any kinds of triggers that you have that will trigger short or long triggers that will fall into their stop, please do not allow them to execute at the open. Wait for that bounce event, or be prepared to go right back in to capture the gap fill. All right? Hey, listen, good luck trading today. Be careful. And if you don't have to trade, which I don't have to trade, you study and you wait for the right opportunities. Don't be an overeager child, because that's what we get to be when we are trading in this market. It absolutely allows all the primal parts of ourselves to come right out. And so we have got to put a lockdown on our personalities if we are prone to impulse events in markets that give us no edge. All right, good luck trading.